All right, joining me all the way from Kolkata is Vivek Bajaj, who is, of course, the co-founder of StockEdge and Elearnmarket. Hey, Vivek, good to see you. How are you?
All well, Kay. How are you?
Very good. Thanks so much for joining us on this edition of Tech for Change. But for everybody who's just kind of tuning in, I want to give them like a little bit of an insight into what Tech for Change is. It's the place where I focus on people in the technology space, companies in the technology space, and individuals using technology to push some form of social good. Now, that whole edtech market and the fintech market, it's seen like a wave like never before, right? And kind of was bound to happen, especially with the pandemic. So let's just start about let's just start with talking about what you guys do, and where that journey kind of began for you guys. Go ahead.
Democratization of various products and services has been something which technology has instigated for the last, I would say, 15, 20 years.
Mm.
And the same thing was due to happen in edtech space, and probably pandemic was just the reason that this happened so fast. When I say democratization means that everyone should have access to all kind of information, and there should not be one set of pool of expert who will tell us what to do in life, right? So what we have been doing since 2013 is democratize financial market for individual investors. Financial market has been hugely wealth creating platform, but only for limited people who
Yeah.
have understood this very well. So
Mm.
we thought that a retail investor who has been always away from things which they should know about the market should get purview of that. So 2013-14 we launched Elearnmarkets as a financial education platform. Again, the
Mm.
focus was to democratize financial education. And Stockage we launched in 2016 as a financial data analytics platform. Again, the objective of democratizing data access to people in large. So
is
that's
that
what we
one
do. We
that's
have almost.
is that one that's not as prevalent across India? It's that access to data and analytics. Is that one of the biggest gaps in the market?
Absolutely. So if you see people who have created wealth and people who have not been, the core difference has always been information arbitrage. That I have more information, I have more data, and I've been able to do better analysis. That's why I'm richer. And people who have not access to that, maybe because people have no inclination to get access to that, or democratically it is not having an access to that. So
Sure.
we solve
Sure.
that problem. Something which
Right.
media houses have been doing. There was a tool called Money Control, which was owned by a large media platform.
Mm.
But again, there are limitations to it, to which extent media can go. So we thought that why don't we create a media neutral, broker neutral platform which should think about investor and help
Super.
investor to take the.
Nice. I tell you what, we have a lot more to talk about this, so I want to slip into a quick break. Let's come back on the other side and kind of figure this out a little bit more. Vivek Bajaj joins me all the way from Kolkata this morning. He's the co-founder of StockEdge and Elearnmarket. We'll do more in just a bit. Come back with us. Tech for Change is this fun little segment that I do, which focuses on the good in technology, and that's what these guys are trying to focus on. I'm talking about StockEdge and Elearnmarket. Co-founder of that very company is with me on Zoom, and you can hear him all across the city. Vivek Bajaj joins me this morning on Tech for Change. Good to speak with you. So, a lot of people kind of forced into the digital era, right? Like you've either been forced into kind of investing. I mean, from the start of say our Janta lockdown that happened in March 2020, or you've been that person who's like, okay, I need to go and gain more knowledge to upskill myself and to push my knowledge to the next level. Uh, and you guys are kind of moving, in that direction. I find it so weird, Vivek, that we teach our kids in school so many things, but not how to manage their finances, not how to grow their wealth. We tell them about a simple few things here and there, but just in general, we don't really financially educate them, which is why India's got one of the lowest financial literacies in the entire world. Am I right?
Absolutely. I would say it's a global phenomenon. We
Mm.
can't blame only India for that because globally people are too busy making money, but how to manage that money to make more money out of it is something which very few people globally actually look at it.
Yeah, yeah. And with this entire process of setting up something like this, uh, what have you understood is the current need for people? And if there's a gap, like say someone listening to this is not doing all the things that you guys have been pushing out to your users and things like that, what should somebody who has zero financial literacy start with?
I think the first thing first is to believe in oneself that yes, you can understand this complex subject. Because for the last so many years, it has been made as if it's a very complex subject, and people have always been like, oh, I don't want to get into it. I don't know whether I'll be able to understand this or not. The terms are so complex. First thing first is people should believe that, start believing that it's not as complex as it is made to be.
Mm.
The big people have always made this complex, made it look to be complex so that no one comes into it and they keep on enjoying the better part of it. The second thing is that just like every profession needs a fair bit of understanding in the beginning. You want to become a doctor, you need to learn the art of medical. If you want to become a lawyer, you need to learn how to practice. Similarly, financial market also needs a fair bit of base building. And there are
Mm.
enough, thanks to digital penetration, thanks to social platform, there's enough content. uh, that's all. That also has a problem, because if you have too many content, free content available everywhere, you don't know
Yeah,
which
yeah,
one is the right content.
absolutely,
So figure
absolutely.
out probably one or two right platforms where you know that there's a decent feedback given, there are more followers in that platform, and then stick to that platform for a couple of months and get the best out of that platform, and then migrate or probably upgrade yourself to a more advanced platform for overall learning.
Right. And say for example, somebody who's got a lot of disposable income,
Yeah,
typically the easiest answer becomes you leave it in a bank account and it accumulates interest. Now that has its own headaches, which I'm not even going to get to.
yeah,
But the other option for people is they know mutual funds, they know stocks.
yeah.
Can you tell us some things that, say, for example, listeners have not heard of, that they should maybe explore? I'm not saying do it. Let them read up more and learn more about it. But tell us what those things are, other than
Yeah,
stocks and
so
mutual funds.
absolutely. So mutual fund has been very, very highly marketed, and everyone have been made believe that mutual fund sahi hai. So if you see, the campaign is actually been awarded as one of the best campaigns in last decade, where mutual fund is nothing but a pooling of money from various individuals, and
Yeah.
there is a professional fund manager who takes the responsibility of managing that money. And it is believed that because the fund manager is professional, qualified, he or she will be able to manage it in a much, much prudent manner. But the problem with mutual fund is there's a problem of plenty. So when the mutual fund manager gets lot of money from lot of people, that's where the performance starts taking the hit, because the fund manager has to take some decisions which may not be in sync to higher return generation decision. So, and obviously there is a AMC fees which a fund manager charges, which is beyond around 1.5% to 2%, 2.5% per annum. So it
That's come down
technically,
though, right? That's come down, or is that still varying?
so it depends upon the fund to fund. So there are passive funds like ETF funds where the AMC fees is as low as 50 basis point, that is 0.5%. But typically on an equity diversified schemes, 1.5 to 2% is still the benchmark
Hmm.
which they charge.
Okay.
But the only problem with that is that obviously as your capital, 1.5%, 2% is your cost every month, every year. So you are actually either you are making money a lot or losing money, but you still that 1.5% or 2% is going out of your kitty. The other option is direct equity. Now, I have to tell to your audience that please don't be scared of direct equity. Direct equity is as good as identifying businesses where probably you will wish to invest. Let me give you an example that, ITC is very close to everyone's heart, right? Somewhere, some other, you must have used ITC products, not necessarily for smoking, but for other FMCG requirements as well.
Yeah.
And if suppose you are a regular user of their product, so that company comes within your circle of competence, that you can
Hmm.
understand their product, you are convinced with their product, and probably at some point you would like to own the company because you're using their product, and you just buy a few shares of ITC because you are convinced with the product of the company. That's the Peter Lynch way of looking at investing, that don't get in too much into technicals, use more common sense, use the products which you are using and figure out the manufacturers of those products, and just keep on investing in those companies because the product which they manufacture, you are convinced with those products.
Sure. Okay. Right. So we said stocks, we said mutual funds. I was asking if there's anything else other than that that people should be looking at. You also said ETFs. I understand you said gold ETFs.
Yes.
Other than that, anything else?
So
Did
I
I miss
think
anything?
ETF is a great source where you can diversify your investment. So you can have Nifty ETF, which is a benchmark ETF for India performance. So if suppose India goes up, then obviously Nifty will go up, and you will be beneficiary of that. Then you have
Those are
gold
index
ETF.
funds you're referring to, right? You're referring to index
Yes,
funds.
those are index funds. Correct,
Okay.
correct.
Yeah, yeah.
You can have gold ETF. So some percentage of your allocation could be in gold, not directly as a physical gold, but as an
Correct.
investment to gold ETF. Yeah.
Right.
So largely these funds which are easily accessible to retail investor, I would always recommend them to start with these, and then obviously as you grow up the ladder, your complexity will also grow, and you'll have much more products where you can get higher return, because higher return means higher risk, and I don't want to recommend things which are
Fair
riskier at
enough.
this moment.
Fair enough. Fair enough. I'll tell you what, let's slip into a quick break, come back for our last leg of conversation, and we'll do that with Vivek Bajaj on the other side. Come back with us in just a bit. Stand by. Welcome back. We've been talking how to grow your wealth, but rather, we've been talking about financial literacy this hour and how it becomes so integral in a time like this. Vivek Bajaj has been sweet enough to join me on that. He's the co founder of StockEdge and the Elon Market. And we've been talking financial literacy and the likes of it and why it's so important and so many people neglect it. Um, Vivek, were you always like a finance guy, or when did this kind of massive change happen for you personally, and you decided to kind of get into the space?
So I'm a chartered accountant. So finance comes very naturally inside me. Then I did my MBA from IIM Indore, specializing in finance. So, and I'm a third generation finance guy. My grandfather was into market. My father.
Okay.
So it's there inside the blood. So it came very naturally. So I would say that I'm blessed. I'm lucky that I was born in this family. So that's why I was able to. But I know a lot of my friends who are from engineering background, arts background, history background. Trust me, in financial market, it doesn't matter what your background is, because
Sure.
it's a most perfect application of common sense in the market, if you want to believe it that way. But people who think that it's very complicated, obviously for them it becomes tougher because your mind already defeats you.
Yeah, fair enough, fair enough. And when it comes to the pandemic particularly, like we were talking a little earlier, a lot of people change the way that they think about finance. You
Yeah.
kind of have to save, or you're living off your savings to a large extent. Uh, who, how do you think, or rather your predictions for the years to come, especially in this edtech and fintech space? What are your top three predictions where you see this market going and where you see consumers kind of benefiting in the next, say, 3 to 5 years?
Okay, so let me share with you some numbers. So in India, there are around 5 crore investors who have registered with the exchanges, 5.5 crore, and out of that, around 2 crore people are active investors. Active means they invest probably once in 6 months or once in a year. Okay, this number is very small
Sure.
comparison to a very large banking database or very large wallet database. So the financial market penetration have just begun in India. So I think in coming 3 to 5 years, we will see at least this 5 crore number reaching to 10 crores. That means more and more people will become active, and more people will be willing to learn to take things in their hand. I'm seeing one major change in current environment where the millennials, or the guys who are now coming into the market, not necessarily the younger guys, even the guys who are 50 plus, who are now coming into the market, they have a very extreme high level of propensity to learn, and they want to do it on their own rather than relying on some tips from someone in the market. So
Correct.
that population will drive this 5 crore to 10 crore, and I think there will be massive penetration of new products in the market to cater to them. I mean,
Right.
we have just started. Look at this. We don't have proper startups who are listed in Indian equity. Only InfoEdge, which is Naukri.com, which is listed. Otherwise, if I ask you, maybe IndiaMart got listed a couple of months ago. The new generation businesses will start getting listed in India. That number is going to be huge. So I think overall, coming 5 years, massive opportunity for people who are into this domain as an entrepreneur, as well as for people who are looking to generate extra return out of financial market through various assets.
Fair enough. Vivek, this has been very cool to chat with you, get to understand your space, and thanks so much for helping us out. And it's nice to hear from you, and wishing you and your entire team all the very best for the years to come. like you said, crucial time in the financial markets and the edtech market as well. So all the very best to you guys, and thanks so much for being on the show. Thank you.
Thanks, Kay, and best of luck to you and your team as well.
Super. Let me just stop this recording. There we go. Thank you, Vivek.